Hey, welcome to Finance Friday. This is the show where we transform your relationship with your money by giving you the information you need to help you grow and protect your wealth. I am Amy Novakovich, and this is Ryan Wilson.
Hey, everybody.
We want you right now to go to our Instagram and follow us on Instagram. We do quick 1-minute videos. We're also going to be we'll start going live on Instagram as well. Check out our Facebook page because we post all kinds of great tips, and our Twitter, our Twitter at Noble Wealth Management. It's abbreviated MGMT. So we know we're getting to the end of the year,
what?
right? We're getting there.
It is.
Yes.
1 month left.
We want you to just save your New Year's resolutions for the new year because we're going to focus on what you need to do right now before the ball drops. We're going to go over 5 things today that you must do before the end of the year.
Yeah.
Anything else you want to add to that?
No. Oh, well, I mean, so we're going to give really, really good tips, and that's what we're going to start doing. We want to kind of just keep this, that it's engaging, it's informational, and so we're not going to really just keep making things that make you feel good. Yeah, so if you do want to go, if that's what you want to see while you're on Facebook or Instagram, we can post a link to some really cute puppies that are going to be walking around and playing together. So if you want to see more about puppies or things, and we are hoping to make you feel good by giving you information that can help you with your finances.
Yes,
and
not that this isn't happy information, but we definitely want to educate you.
Yeah.
So if you want to get your finances in better shape, if you want to be educated on what you should do to help grow your money, then you definitely stay here. But if you're looking for just some happy, feel-good, motivational stuff, there's all kinds of other resources.
And we've done that, so you can watch our previous videos, but we want to make sure that going into the end of the year, these are things that you can put into place now.
Information.
Yeah. So the first one that we're going to talk about today, number 1, is that
can I give my tip?
Oh, yeah, right, go ahead.
Every week, we want to give you a tip, like right up front. We want you something to, in case you can't sit and watch the whole video the whole time, we want you to take away something right away. So we give a little nugget right in the beginning, not necessarily to do with our topic, but I did just do a 1-minute tip on Instagram about how do you judge your performance. There's a lot of people right now that are really discouraged because the market has gone down over the last 6 weeks, depending on what index you're looking at, anywhere from 10 to 15%. So you might think, oh my gosh, like my advisor is terrible or I'm doing terrible. Well, since the beginning of the year, the market, depending on the market you're looking at, is fairly flat. So anywhere between like down 2% to just flat for the year. So if you're looking at your performance, I would suggest that you see what you're invested in, because like international markets have actually not done so well this year. Bonds are totally different. So you have to know what you're invested in order to be able to judge your performance. You can't just say, oh, I'm, down 10% and the market is, flat. You might not be invested in the U.S. stock market. You have to check that out. Okay, now number 1.
All right, so that'll kind of segue in. So number 1 is that with the pullback in the market right now, an opportunity that you have is to go ahead and take losses on the year by selling the things that are down, and then you can actually, without getting what's called a wash sale, so if you were to sell something for a loss and then within 30 days buy it back, it would actually wash that loss. So
they don't let you write off the loss.
The government is not okay with that. But what you can do is buy something that's similar, that's maybe in the same sector, or maybe that is, if it's an index, another ETF that's in that.
Different investments that are similar.
Yeah. So like one, for example, would be that if you are in an index that is tracking the S&P 500. Right. So an example would be
just an index of 500 U.S. companies if you're not familiar.
Yeah. So one would be the SPY. That's the ticker symbol, and it tracks the index. And
so you just go to like Yahoo and Finance and type in SPY, and it'll pop up the index.
And so if that one is down for the year, for you, depending on when you bought it, you can go in and then sell that and then buy like the IVV, which is another index, another ETF that is almost exactly the same. I mean, these especially the S&P indexes are very, very close, and so you can buy that and then take the loss on the year, which can help with taxes.
Which is a tax write-off. Yeah. So if you have gains, like 2017 was a huge year. So if you are one of those people that paid a lot of capital gains, I mean, there's so many ways that you can get tax write-offs, but this is a super easy one that if you have gains, especially from this year, whatever, from selling a house or whatever, you have capital gains from any investment, you can then take the loss and help offset capital gains. So that's, I mean, we just did that with a client. We
Yeah.
took a $60,000, I mean, it's not a lot of money, but it was a $60,000 loss, went in, immediately bought something similar, and now we're invested in the same stuff, but we get to write off the $60,000 taxable loss. So this is something that we call it tax loss harvesting. So before December 31st, you must go out and get this done. So take a look or ask your advisor if you're not sure.
Exactly.
Okay, number 2. 401k and defined benefit plan. So if you are self-employed or if you are in business and you are looking for ways for a tax write-off, you can set up a retirement plan by December 31st. What do I mean by retirement plan, Ryan?
Well, there's 401ks.
Which most of you are familiar with.
Yep. And then there's an SEP, a SEP plan.
Yeah, the SEP deadline actually goes
that one goes
a little
until
longer. But you're going to need to know what you want to put into the SEP by the end of the year. So you want to start looking into these options because you can open them by the end of the year. The 2 big ones really are 401k and defined benefit plan. You don't need to know all the ins and outs and the details about what that is right now. What we want you to know is that by the end of the year, if you're looking for a tax write-off and you are a business owner, call your advisor, call your CPA or accountant, or call us or message us and say, is this right for me? Can I get a tax write-off by setting up these retirement plans? And all it is you put in money, you invest it, and you get the tax write-off. So you're not spending the money, you're just repositioning it, and you get a tax write-off for that. So that's another easy thing. Okay, so number 1 was take losses, and you can take those losses and buy back something similar, and you get a tax write-off. Number 2 is setting up a retirement plan by the end of the year to get a tax write-off. A lot of this revolves around taxes.
Yeah.
Because you have to get it done by the end of the year.
By the end of the year, and
that's your only choice.
Yeah.
If you wait until January 1, you are no longer eligible to do any of this stuff. So, and number 3 is charitable giving.
Yeah. And so with the new tax laws of 2018, there is a little bit of changing in how charitable giving can affect your taxes.
Impact,
yeah. And so, with the new tax laws, you can get a standard deduction or you can take an itemized deduction. And with the increase in the standard deduction, most people will just be taking the standard deduction, which means that
you get the greater of the 2.
Right. Right.
Am I saying that right? Yeah, you get the greater of the 2.
Yeah.
So if you want to break it down and itemize, and it's greater than the standard, you take the itemized.
Yeah, and the standard is for a single person.
I can use my board.
So if you are going to take, as a single person, take the standard deduction, you can deduct $12,000 from your income, and then if you're going to itemize, there is potential for more, but you have to go through and find out all the areas that you spent or gave, or
you have to keep track of it. It takes a little effort,
bit more time.
But who doesn't want to send thousands less to the IRS?
Yeah.
I mean, I think it's worth it.
Yeah, every dollar counts.
So this would be just a very simplified example, because again, we're not CPAs, but we do know enough to give tax advice. But this is just for illustrative purposes. We just want to give a general example.
Yeah.
So for instance, there it is. So if you have the standard deduction, which is $12,000, if you give $10,000 to charity, and then you have $5,000 in mortgage interest that you can deduct, because again, there's certain income levels and things like that are required, but just for simplistic, let's just keep this simple. And then you have another $5,000 medical expense. Your total in itemized is $20,000, so the charitable deduction helped you. Now, if you only had given $10,000 to charity and you did not have anything else to deduct, that $10,000 charitable deduction does not help you, because you're going to end up taking the $12,000 anyway.
Right.
Does that make sense?
Yeah.
So in order to know if your charitable deduction helps you, you kind of have to know your other deductions.
Yeah. And again, that's just a simple tip. Talk to your tax advisor.
Talk to your tax
but these are just ideas that almost just for you to be able to bring up to when you go and sit down with them to know, or give them a call before the end of the year to know, like, hey, should I be itemizing? They should kind of know your information and know how much, have an idea of your tax implications for 2018. So they should be able to help you out with that. And then again, with filing jointly, it's $24,000.
Yeah, I forgot about that.
As a standard deduction, which is a good chunk of money, and again, will be a lot of itemizing in order to kind of get to that. But it's possible. So again, talk to your CPA tax advisor to find out whether you should be itemizing or just take the standard deduction.
And giving to charity. I mean, if you take the losses that we talked about in number 1, if you also put $50,000 into a retirement account by the end of the year, and you give to charity in order to bump your deductions into the itemized deduction space where you can actually take more deductions, we're talking maybe tens of thousands of dollars, depending on your income and depending on your expenses, in money back in your pocket and not going to the IRS. So please, definitely just, you don't need to know all the details, just know enough to ask the questions.
Right, exactly.
Okay, the fourth one.
Yeah, so number 4 is just get an idea. We're nearing the end of the year. You've had a whole year of spending now. So it's a good idea that within the last couple weeks of the year, or you can start now, to go back through and find out where you spent your money. Again, you've had a whole year, and so you should know by now.
How much?
You should know how much by now that
Groceries.
how much you spent on groceries, how much how much you paid on your house payments, all of those things. That might be a little bit easier one to find out because if it's monthly. But
no, but like I know American Express, you literally can go on and it'll categorize it for you, and it'll say, okay, medical expenses, restaurants, travel, lodging, and it'll break it out for you. So sometimes it can actually be really easy. Or if you want to get really detailed and you want to familiarize yourself, and we'll go over why this helps you in a moment. But if you want to get even more detailed, you can sit down and go through your own expenses and just kind of add it up in general, ballpark it, to see, wow, because have you ever sat and just been like, man, where did all that money go? Like you get a tax return check, and it's like, where did all that money go?
Right.
Or, whatever. You just have no idea where your money goes. The reason why this helps you at the end of the year to understand where you're spending is because going into the new year, right off the bat, you're aware and you know how to just, if you hate the word budget, which we do, we don't like the word budget, but you're just more self-aware about where your money is. It's not just going into a hole anymore. You can now make better choices as far as, do I really need it? Is it making me money? Is it helping others? I always say those two things.
Well, and then a few weeks ago, we talked a little bit about being aware and knowing where your money's going. And so, you can watch that one. That's a few weeks ago. But the reason that this is important is just because sometimes you don't even know. I was just talking to somebody yesterday, and they said that they had 2 different Microsoft accounts that they were paying for Word, and that's can be $50 a month. That can be. And so you're just know where your money is going. Sometimes you just don't even know, and so you can go into the new year already being up for the year by knowing, okay, I can cut back on this, I can cancel that, and so you start the year off right.
Well, because of the financial stress it causes.
Right.
Why not make yourself more aware to lessen the financial stress?
Exactly.
We have enough stress in life. You don't need to stress about your finances. And if you just do this one trick of just knowing, categorizing your expenses, you will save so much money. There's another great example about medical expenses. A lot of times, you will get a bill in the mail from, a medical provider that you actually don't owe. Maybe they forgot to submit it to insurance, or they had your old insurance information, or insurance actually needed more information, so it's just pending, but they bill you anyways because you're in a computer system and you get a bill, and you go back through your expenses and you're like, wait a minute, my deductible is $2,500 and I paid $5,500 in medical expenses. You overpaid somewhere. So now just being aware can save you thousands of dollars. I can't tell you. It's been thousands of dollars. Not to mention, so there was this one, I'm getting off on a tangent.
Cap that thing. I'm wearing a white shirt.
Yeah. There was this medical bill that I had for my son. My son was in the hospital, and it was like $6,500. And they sent it to me like 9 months after he was in the hospital. And I was like, man, how am I getting this 9 months later? And if I would have just paid that bill, it was like $6,000. And a lot of people are like, oh my gosh, I owe this money. How am I going to pay it? I just called them, and she's like, I am so sorry. I don't know how you got that bill. That should have been written off. $6,000 I just got back in my pocket.
Yeah.
Like sometimes you don't owe it. So just be aware. Just categorizing your expenses helps in so many areas, not just budgeting, but creating good financial routines.
Yeah. And again, we want to start the new year off by being proactive before the new year. And these are just ways to do that. So again, before we go into the last one, just to kind of recap, number 1 is that with the pullback in the market, you can take losses, harvest your losses by selling something and buying something that's similar to avoid the wash sale.
Right.
Number 2 is that by the end of the year, either start if you are self-employed business owner,
have a couple employees.
Yeah. Start a 401k or defined benefit plan by December 31st. It'll save you a ton in taxes. You can put money in there and just kind of
my benefit
reallocate
plan,
it.
You can actually put up to $210,000. So
Yeah.
it's definitely something
Yeah.
to look into.
Exactly. Number 3 is your charitable giving and knowing whether or not you should take a standard deduction, whether you should itemize, how charitable giving can affect your taxes for 2018. And again, we gave some tips, but definitely talk to somebody, your tax advisor or CPA, because they will know your financial situation
Right.
and your tax situation even better and give you a
something to be
broader
aware of,
thing.
'cause you have to
But
give
know
to charity
to ask those questions
by
for
December
sure.
31 to have a count.
Exactly. And then number 4 was get an idea of where your money is going. Start the year off right by being proactive in December and know where you spent your money for 2018 so that in 2019 you can already be up for the year.
Yes. Last
And number
one.
5.
Number 5. So this is actually for people that are over the age of 70 and a half, and if that's not you, this is actually still something for you to listen to for your parents, for your grandparents, for anybody that you know that you can help them. But if you're over 70 and a half, from all your retirement money, we're talking in general terms, you must take what they call a required minimum distribution, meaning there's a minimum amount that you have to pull out and pay taxes on it. That's why they want you to pull it out. They want you to pay taxes on it. So if you actually miss your RMD by December 31st, you will have a 50% penalty on that. If you do not take this by December 31st, and we here at Nova, we actually every year go through the list and see who has these required minimum distributions and call clients, and we're proactive on it. But not all firms are. I know at our last firm, we were not. We had 1,200 clients. So we weren't super proactive on getting ahead of it and telling clients, like, look, you still have to take your required distribution by the end of the year. It's your responsibility. This is why this is so important, because we're going to have a 50% penalty, guys. This is thousands of dollars. So if you're over 70 and a half or you know someone that is, you must pull out your required distribution by the end of the year, by December 31st, or you will have a 50% tax.
Yeah.
Okay, so again, real quick, number 1, harvest losses. On a pullback, you can take losses and then just invest in something similar. Number 2, set up that 401k or defined benefit plan by December 31. By the way, you don't have to fund it by December 31. You just have to get the documents signed and in place and the accounts open by December 31. You can fund it up until your tax filing deadline. That's a very important note, because people are like, oh, I don't have the cash right now around the holidays. Well, you might have the cash flow in the next coming months, so you can fund it later, just get it open now, and you can still save on taxes for the 2018 tax year as long as it was open by December 31. Number 3, charitable giving. Make sure before you give to a charity before the end of the year that it will help you, that it'll get you into the itemized level, and if it does, I mean, I would even consider giving your 2019 giving. If you have a large tax bill and your CPA says, yeah, whatever you can give will help you, call up that church or charity or whatever and be like, I'm going to give you a lump sum for 2019 on December 30th, and you get the tax deduction in 2018, even though you're giving, for the next year, but you get that deduction if it's done by the end of the year. Know where your money went in 2018. Just do big categories. This doesn't have to take a lot of time, but it will save you a ton of money heading into the new year. You've got to do this before year end, before your tax deadline. Because if you wait till April, you're already a fourth of the way through the year. So it's got to be done at the end of the year. And finally, the RMD, the required minimum distribution, you must take by December 31. All right. If you have questions, I know we just threw a lot at you. Yeah. But I hope, if anything, you may not know all the details, but you have definitely in mind things that will save you money and help grow your wealth. But if you have any questions, feel free to reach out to us. Our website is novawealthmanagement.com, and we will see you next week.
Yeah. See you next week.
Yes.
Have a great weekend.
Thanks, guys.